Hello and welcome to the Jake and Gino podcast. My name is Gino Barbaro, and on today's podcast, we have Vince Gethings. He's a real estate investor who launched his journey in 2013 while serving in the Air Force, utilizing his VA loan benefit, and transitioned to multifamily investing in 2018 after joining the Wheelbarrow Profits community. In just a few years of implementing the three-step framework of buy right, manage right, and finance right, he has grown his investment company portfolio to over $100 million. Welcome to the show, Mr. Vince Gethings. How you doing, brother?
I'm doing great, Gino. Doing great. Happy to be here.
The first time I met you was in Nashville in 2018. This young kid, he didn't have a mustache yet. And I said to myself, are you even legal to drive? Are you above the age of 18? You look like a young little kid. But as I started talking to you, I'm like, this boy is wise beyond his years. And so I'm trying to put the puzzle together back then. I'm like, hold on, you're stationed in Hawaii. You're doing deals in Michigan. Talk about a side hustle. I mean, talk about that experience going to MM2 and the struggle that you had at real estate at that point in your life.
Yeah, absolutely. So, starting at the 2013, somebody told me about, using the benefits of the VA home loan benefit, which is, I think, one of the best things veterans have and surprisingly, a large number don't utilize it. So Chief, told me, you buy a house, with your veteran benefit, because, a lot of times military guys, they don't want to be chained down, anything like that. He's like, just get the house, start building the equity. The BAH, which is our allowance, will start building your equity for you. He's like, that's the best thing we got going for us. So that's where I started, was doing what was called a house hack on a house that was actually Travis Air Force Base in California. I bought the kind of the crappiest house in the decent area, did that plan, moved in, flipped it while I was there. And then when I sold out of that in 2016, when I was on my way out to Hickam Air Force Base, Hawaii, that's when I got the real estate bug got me. And I was like, all right, this is the best thing ever. I think it was like $130,000 ish is what I cleared at 22 years old or something like that, and 23. And I was like, this is way better than what I'm doing now. So, so when I got to Hawaii, it was very much like, all right, consume everything you can get. I got all the books, all the YouTubes, everything. And then I realized that, all right, I can get into some small multifamily. So 2016, I started buying the single families and the duplexes and the fourplexes. But in Hawaii and California, which was my last two duty stations, those are very hard to get into. So I had to find another market. So I used a kind of thought process of like, all right, where do I have a competitive advantage, and where is the real estate that I can afford at, and where's something that is a little bit more stable than me bouncing around in the military? Because at the time I wasn't planning on getting out. So I was like, I need kind of like a home base that, no matter where I'm at in the world, I have a portfolio in one location. So that led me to Michigan. It's where my wife's family's from. That had my little bit of competitive advantage there because they can go drive by the properties for me when I'm stationed overseas. So the first obstacle was, how did I build 20 unit portfolio at young 20s year old while being overseas in Hawaii in a market where cap rates are in like the twos? Well, I use that framework of, let me go to the Midwest where units are affordable. Let me go to a place where I have a competitive advantage because my wife's family is there and they can go drive through these properties, make sure the property managers are taking care of me, do tours for me with the real estate agents. So I was able to flip the money that I made off that first house flip in California and flip it into my first 20 units in Michigan. Then I liquidated my retirement accounts, my brokerage accounts to get there. I was like, all right, I'm a real investor now. And then all my, powder was deployed. So I was like, all right, now what? So that is when you learn, like, that's when you really become an investor, is when you deploy your initial, nest egg or whatever you want to call it. And then to get your first deal, it's like, all right, well, how do you get into the next deal? That's where that creative finance and the creative strategies, and you really have to go dive deeper into this world to get to that next deal. So I got 20 units very fast, about 18 units. And then I started looking, I was like, all right, I see other people buying these apartment complexes. There's more to this game. How do I get into it? And that's what led me to the Wheelbarrow Profits Academy, the Jake and Gino community, and going to the events and learning there. And then going from a fourplex to my very next unit after joining the community was a 52 unit joint venture. And we made $1 million off that in about, it was like 15 months or so, 18 months. We held that onto that one. And that is what started the snowball to that $100 million portfolio that my company has now, Tri-City Equity Group.
So let's go back to when you're in the military. And this is for anybody listening, because the military, they teach you an amazing amount of skills. And as you know, and as the listeners should also know, multifamily is a team sport. What are some of the things that if you're in the military that you can lean upon to help you in your multifamily journey?
A lot of it is discipline. I think, having the discipline, just run do the process, trust the process was really big. Another thing I felt like I get garnered from the military was just the confidence of, I don't need to have the full picture. If I have, if I have the training and I have a pretty good idea what's going to happen, maybe 50, 60, 70% of an idea what's going to happen, I'm very confident in, I guess, my ability that I'll figure out the other 30, 40% on the way. Because a lot of people get that analysis paralysis. They need, especially when underwriting, you get into a big, elephant of a task of underwriting a multifamily commercial deal. And it's like a lot of people just get paralyzed by the what ifs and the things. So it's like, well, if you have the training and you have your market data and everything like that, you don't need to have the full picture. You're never going to have the full picture. You have to have, have most of the picture and trust your training and, build the parachute, the rest of the way. But it all goes down to that training. So if you have good training, that's where you get your confidence from.
And I think there's a couple things that I'd like to add to that, because I've known you've been a coach in the Wheelbarrow Profits community for over 5 years. You became a coach soon after you started to learn how to implement the framework. And the couple things I was super impressed with what you brought to the table in multifamily was your project management ability. You're able to create teams. You're able to set up systems and processes and go into various markets, whether you're in Virginia, whether you're in El Paso, Texas, whether you're up in Michigan. It's sort of the rinse and repeat. But if you don't learn the framework and you don't learn the education, you can't utilize the skills that you're taught in your job. And for anyone listening to this, you may be working as an employee and say, well, I don't really know what I can bring to the table as an investor. There are so many facets. And what was great about Vince, when he used to teach at our boot camps, he'd come in and he would show his systems and processes to manage the manager. He may not have been property management, but he was the asset manager overseeing the property manager. And if you're in the military, you are learning those skills of property management and team building, which is vital in this business. Now, as you're in 2018, you're sitting in the crowd and you're looking at Jake and Gino. And at the time, we probably had 1,500 units. You probably were saying to yourself, how did they do that? How can I do that? And what limiting beliefs were you carrying at that time as you're thinking about this? Because I know you must have been sitting out there going, I want to scale up, but I don't know how to do it right now.
I think the limiting beliefs is big. I think that's what cripples a lot of people. They have things like imposter syndrome or limiting beliefs. And absolutely, even today, I have to stay conscious of some of those things. No, absolutely. Especially somebody that didn't come from very much, growing up, it's like, I'll never get there. You always have those excuses that you got to tell yourself like, oh, that's not for me. I'll never get there. Or they had a boost or something like that, and realize that those are just mental barriers. Like exactly what you said, they're just limiting beliefs that you put in front of yourself. To me, they're just like, give yourself excuses of why you don't want to do something or start something. The community really, when you get into communities and mentorship, that's the key to get rid of the limiting beliefs. Because the mentorship, you get a coach that has been in your shoes and they've walked that path. And they say, hey, a couple years ago or 10 years ago or 20 years ago, I was exactly where you are. This is the challenges I faced. This is how I come over it. So mentorship is really good for breaking those limiting beliefs. And then the community is huge, because then you get around, a lot of people suffer from, if you're just starting to get into the real estate, but you're the only one in your family and you're the only one in your friend circle that is trying to have these ambitions to get into real estate or anything like that. It's very hard because your circle of influence is like they might not get it. They might think it's too risky. They're going to try to talk you out. They don't want to. Some of them might selfishly not want to see you succeed higher than them. There's a whole kind of psychology around your circle of influence. So putting yourself into those rooms where you're in a room with 50, 100, 150 people, and every single one of them has a story like you, and they want to, have more for their families, their legacies, their kids, and they're all busting those limiting beliefs together, and they're all having that energy is pretty powerful. So the community mentorship, I think for me, allowed me to overcome the, kind of the limiting beliefs and things like that.
Do you mind if I add on to that real quick, Vince?
Of course.
I think it's important to understand that Vince is talking about your peer group. If your peer group is hanging out on the weekends, watching football games, getting drunk, while you're saying to yourself, I want to become financially free, two things are going to happen. Number one, you're going to hang out and start drinking with them. Or number two, you're going to lift them up to where you want to go. It's your choice. If you can't lift them up and you still want to go, what Vince is saying and what I believe wholeheartedly is you need to find a community that is right for you. There are so many different types of communities and masterminds out there. Vince was fortunate to find the Jake and Gino community at that time because we weren't only teaching syndications. We were teaching creative financing. We were teaching to buy smaller deals. We were teaching to buy bigger deals. The value of the Wheelbarrow Profits community really is its community members, number one, but the ability ability to be surrounded by people who are doing deals. Over 86,000 units the community has closed to date. They've raised over $700 million. You ain't doing that watching football on Sundays with your buddies drinking beer. It's just not happening to put yourself out there. So number one, it's that accountability that is so important. You're getting on calls every week. You are getting with your coaches. You're coming to in-person boot camps. You're having people stay on top of you saying, did you underwrite that deal? And you're also being able to ask people questions that you don't know. And that's the important part. And I wrote down here also, like I said, that accountability is really important. But it really comes down to understanding what your why is. And for you, Vince, what was it early on for real estate? Why real estate? You had a good gig. You're in Hawaii. And meanwhile, I went out and met you in Hawaii at one of your events. I'm like, this place is unbelievable. Why would you want to leave Hawaii? Why do you want to do this real estate thing? What was it for you in real estate?
The real estate was multifamily. To me, I tried a little bit of everything. I did the small multifamily. I did house flips for years. I still like house flipping. I think it's a great way to, drum up some quick cash, a couple, 10, 20 grand or something like that. So I like house flipping, a medical center and stuff like that. But I always come back to multifamily. I think multifamily is the best asset class like ever invented. And I've done stock markets. I dabble in crypto. I got a bunch of, I do the precious metals we talked about in gold and silver. And I always come back to multifamily. I think it's the best asset class. It checks all the boxes for, recession resistant, appreciation from, the markets. You get the debt pay down, you get the tax advantages. It's way more stable than other forms of real estate. Look at the office space market right now is getting crushed, and it has been for years. So I like multifamily. I use multifamily as the vehicle to where I want my family to go and the wealth that I want my family to have and pass down, through the trust structure and, that the family legacy. I got to multifamily as the best vehicle to get me there, like the surest way.
Yes, but you didn't answer my question though. My question is, why did you want multifamily? Why are you doing crypto? Why are you doing all these entrepreneurial ventures instead of just being comfortable and saying, hey, I can lock in my 20. And for those of you listening, Vince made a really big decision a couple of years ago. He decided to say, hey, I could stay in this gig in the military for another 7 or 8 years, clock out at 20, get my pension and be okay. Instead, he took a gamble or a risk and decided to leave a little early, not get his pension. But what he said was, if I can capture those 6 or 7 years and make enough money in one deal, that'll pay for my health insurance. That'll pay for the extra money down the road. Why wait down the road? But Vince put a lot of things into play. He did get the education. He did take massive action. So why take that risk when most people would just say, hey, I'm going to ride it out?
Yeah, a lot of it was the chance to get that freedom that we all want. A lot of people, the pension and that security is great for a lot of people. I want a little bit more. I wanted that time freedom. I wanted that location freedom. I wanted that freedom to say no. So that is the type of freedom that I'm after. Is like, I want to be able to take my family and go do a month or two in Italy, like we talked about, when I was at your house a couple weeks ago. And I was like, I want to go there and do a trip to Italy and be able to run my companies there. And I don't want to have to ask permission to do that. I don't want to have to worry about commitments and other things that I have. It's like, if I have the internet and I have my laptop, I can run my companies. I can run the portfolio from that. So that is the level of freedom that I'm after. I'm not really big on, the material things like the cars and stuff like that. Like, sure, that stuff's great. But if I have to answer to somebody, if somebody has control over my time, that is what I don't like. And that's what I'm, using the multifamily and the companies to give me that freedom and my family.
So what I'm hearing is very similarly to my story and most of the guests who we interview on the Jake and Gino show is you're not employable. You're just not a good employee. You at a young age were probably told to do a lot of stuff and you didn't want to do it. And as you grow up to become an adult, I'm like, I want to do what I want to do. I don't want to be told what to do when I want to do it. Now there's pros to that because you got to work a lot harder. Cons, but there's also pros because you can make up your own decision. So as you're listening to this, that's the why. Figure out what your why is. We're talking about one of the best vehicles out there. If you don't understand what the why is, you're going to get in the vehicle and there's not going to be any gas in the vehicle. What Vince is talking about, his why and why he's locked into it is what's really important. Now, if I'm listening to this and I don't have the time or I'm still working at my job and I want to get into multifamily, but I don't have the time. Can you discuss how people could actually invest with you if they want to learn more about investing with your companies?
With Tri-City, yeah,
Yeah.
absolutely. So Tri-City Equity Group, we're a product of Wheelbarrow Profits. I grew the whole company on the framework, $100 million in assets. We're in DFW, so Dallas-Fort Worth markets. If you want to check us out, tricityequitygroup.com, or just find me on social medias. I'm on all of them if you want to kind of see what it looks like to be a investor in one of our deals.
What is the framework? Let's go into that buy right, manage right, finance right framework. If I am somebody who just landed on Earth from Mars, I don't know anything about real estate, explain it to me in as simply as you can, but how you've utilized it to be able to scale to over $100 million in assets under management.
Yeah, and I love the framework. It's so simple, but it's so powerful. And it's like, I think a better way to think about it, at least the way I think about it, is not how to buy real estate, but how not to buy real estate. So I've asked on more deals because it didn't match the framework. The buy right, you really have to know your market, know the comps, know how to underwrite deals, make sure you're getting in a good cost basis, make sure you know where you're at in the market cycle to make sure you're buying right. That's key. A lot of people didn't buy right, a couple of years ago. And now they're chickens coming home to roost kind of thing. Finance right. That's another big one. There's a lot of people are doing like the bridge, floating rate bridge debt. And now lenders are telling them they have to, buy rate caps or buy more rate caps, things like that. So we really focused on the finance right, putting the right debt for the right strategy in place, and not just going to lenders and saying, give me, we'll take whatever loan you give me with whatever terms. We're just happy to get approval, and they just get the worst terms, and then not realizing what type of debt to place on to meet their business strategy, as well as where they're at in the market. So for our framework, we don't do the floating rate bridge debt or anything like that. Everything's low leverage, long-term fixed rate. It really lets us sleep good at night, and knowing that we can weather some storms like the market's been seeing for the last couple of years. We can just ride it out and live till the next up market cycle, where a lot of people that were getting the floating rates and the bridge debts, a lot of those loans are coming due, and some of them might not be able to transact or refinance. So there should be some good opportunities for purchases in the next year or so. And then the manage right, the manage right is the reason I joined this community versus other ones, because I went through a lot of other options before I landed on the Wheelbarrow Profits community. And the manage right was something that the other ones did not have. Nobody even talked about it. It's like, here's how you find deals. Here's how you underwrite. Here's how you raise money, close, go on vacation and collect your checks. And, I knew, just because I had a little bit of experience, but I knew just in the back of my head, like, that doesn't sound right. Somebody's got to manage this thing after you close, and having that manage right framework is the reason I joined, and it's world class, the training we get here. So the manage right is when you close the deal, somebody's got to operate it, somebody's got to execute on a business plan. And who's that going to be? Somebody has to be able to kind of see above the trees and see what's coming, next week, next quarter, and get ahead of it. Make sure you're not going over budget, being able to catch things, have the resources at their disposal. The community has excellent resources to be able to get better deals on vendors and things like that. So the manage right is, if you don't have that, then all your equity's at risk, and the whole deal's at risk if you can't manage it right.
I want you to picture a wheelbarrow as you're listening to this. There's the two back legs, and there's the wheel of the wheelbarrow. The two back legs are the buy right and the finance right. Once you've bought the asset properly, and by the way, if you want a copy of Wheelbarrow Profits, just email me, gino@jakeandgino.com, and I'll send you a PDF copy of the book. It goes into detail about the framework. But getting back to the wheelbarrow, the back legs of the buy right and the finance right. Once they're done, they're fixed, right? If you didn't buy the asset properly, or as Vince said, if the finance right is bridge debt, all of a sudden that's at risk. Your wheelbarrow may topple over. And that third component is the wheel of the wheelbarrow. It is in constant motion. It's called systems and processes, right? We talk about people, systems, and culture in Wheelbarrow Profits, and that's really, really important. And for those of you out there, Vince is out there in the community creating multifamily entrepreneurs. That's what it's all about. It's about teaching these systems. And the irony is, well, I don't want to call it irony, but the epiphany that I had when we were starting this framework is, if you're buying any deal in real estate, or you're even buying a business, every deal and every business should be viewed from this framework. You should try to buy the asset with certain buy right criteria. The financing is crucial, and then the managing right. So if you don't look at any deal or any business through that lens and you don't execute on those three pillars, one of those pillars is off, you're going to have an issue with your business. And now, if you want to learn more about Wheelbarrow Profits, just go to wheelbarrowprofits.com and see what the community has to offer. Before we take a time out, Vince, what I'd like to know is, give me some of the mistakes that you made early on back in 2018, 2019. Share them with us.
All right. Made a lot of mistakes. Like I said, I had the community. So I'm like, hey guys, I think I made a mistake. Let's get together and let's talk this out. I don't know about 2008. Give me a second to think about the 2018. A more recent mistake that I made as an asset manager was not reading the market fast enough when it came to renovations on units. So as the market, the market run up, going from 17 all the way up to 2022, or really 2021, because it kind of turned in 2022. We were doing kind of higher end premium level finishes, and we were doing a really good price because we were able to get our vendor contracts down, bulk purchases, things like that. But when the market turned and our residents and applicants became a lot more price conscious versus like fit and finish conscious and amenities and stuff like that, they just wanted to know, what the price was. They don't care if it had granite countertops or, this backsplash and whatever. I didn't read that fast enough in the market. So what ended up happening is I had like a whole bunch of units for about 6 months worth of units that we over renovated to where the market was at that time. And sure, it'll wash out, because I'll hold the asset and we'll catch it on the next upring and be able to get those rent premiums. But what the mistake was, I should have read that faster and saw that in the tea leaves, so to speak, of the rent comps and the concessions coming, that lower the renovations down. People aren't wanting that right now. They just want clean, safe, affordable housing during this cycle of the market because they're getting squeezed too. The residents are, and pull back on the renovations because they're not going to essentially pay extra for that. So our return on that investment, the dollars invested into the CapEx, went down for that batch of units I did. Like I said, I'll catch it back up on the next time. But the mistake was being able to read that market faster. So that is a big tip that I took away. And I was once I realized the mistake I made, I was very open. I was like, hey, everybody, downgrade your units if you're starting to have that rent decline, like a lot of people were still having, or having offer concessions. Start pulling back on your renovations right now because you're not going to be able to get that bumps in rents that you think you're going to get from your pro forma when you bought this asset.
Vince, that really goes to the three pillars of real estate that you guys teach in the community, because you didn't understand where the market cycle was. That market cycle was really great in 2018, 2019, and 2020 when the asset prices are going up and people have more money, you have stimulus money. But if you had read the market cycle, and most of us did the same thing, if we had understood where we were in the market cycle, where 2022 is the high and all of a sudden there's less money, it's harder to rent units, that's where the problem was. So understanding the three pillars of real estate with market cycle, debt, and exit strategy, that was not the right part of the market cycle to actually execute that. But you weren't the only one. A lot of us had done it, wherein you can go into a unit, not really do that much renovations, and probably get $50 in rent bumps, as opposed to spending $10,000 in that unit and getting $100 in rent bumps. That doesn't make sense. So understanding the market cycle where we teach is crucial. Do you have any other tips to share with us? Any other mistakes?
Other mistakes we have is, I'm trying to think.
Well, what about raising capital? I mean, as far as raising capital, not getting enough investors on your list, waiting too long, not being able to express the value of the deal, because capital raising can be challenging for people. And that's one of the ways that I know that you've excelled, where you've been able to scale the portfolio. Because somebody may be on the show listening, well, I can't do a 100-unit deal. Well, you may not be able to do a 100-unit deal on day one, but you may be able to partner with somebody on a 100-unit deal. And then a year or 2 years down the road, you may become the lead sponsor in that deal.
Yeah, absolutely. I can take that question about the capital raise and kind of spin it to how I coach newer students in the community. Is they have to start kind of retraining everybody in their circle or their sphere of influence, or however you want to call it, so they associate them with real estate investors. And that I think that's the biggest mistake that newer investors make, especially if they have more wealthy circles, is they just assume these people are going to give them money because they have it. Sometimes, it might be a dentist or a doctor, and they're like, well, all my friends are doctors and all that stuff is doctors. And then they go to try to raise $1 million and they come to me like, I only raised 150,000 and it was for my father-in-law. And I'm like, well, because they don't associate you with Rick the doctor, or Rick the investor. They associate you with Rick the doctor. And so you have to start rebranding yourself in those in the eyes of your friends, your family, the people you're trying to raise capital from. So they don't think of you as, Rick the doctor. It's Rick the real estate investor, and a steward and a fiduciary, and somebody that is smart and is paying attention to the market of this. And so I think starting early on, a lot of people make that mistake just because they know wealthy people that they're going to give them that money, but it doesn't happen like that. So starting really early on of developing your story, your brand, start every conversation you have, every outing, everything, just start weaving in that, hey, I'm doing multifamily real estate now. I'm going to this conference, learning about multifamily. I joined this community about multifamily real estate. I partnered on this deal as, like you said, a smaller position. Maybe I had to partner with somebody bigger to get on my first deal or two, but it's not about the equity in that deal. It's about the credibility of getting that check mark on the resume, saying, all right, I've done partnerships on deals before. I know the ins and outs. I'm starting to build my own systems and processes and frameworks, and how I make decisions under pressure and things like that, and learn from mistakes. And now I can start going to raise capital as a GP, and that might, or a lead JV member or something like that. And that might take time, but I think the biggest mistake I see people doing is just assuming they know wealthy people, and those people are going to invest in their deals, but they don't know you as an investor. So it's not going to happen. So knowing that mistake now, for those listening to this, you can already start developing your kind of hero story, like we did earlier on in the show here, for me being in the military. And then, associating that with, I'm an investor now. I'm not Vince, the master sergeant in the Air Force that, does all this cool stuff in the Air Force. It's Vince, the business owner, real estate investor. So it took me, a couple of years to change that, branding, so to speak.
And I like that, because in the academy, you do teach buy right, manage right, finance right, but there's also a huge section on syndicate right, but there's also a section on brand right. And there's certain things that you need to do. You need to start creating your story. You need to start focusing on your avatar. Who are you speaking to? Who are you comfortable speaking to? And I wish we could share this on the show right now, but there's so many different things that you can do with the branding. And some of those things were really excellent. I think the last thing before we go to the break is your identity. Vince is not identifying as a master sergeant. Now, Vince is identifying as a multifamily entrepreneur. And anybody listening to this, you need to start identifying with what you're trying to become, because the language changes, your credibility changes, the way you speak about it changes. And then all of a sudden people feel that, and they can feel the energy coming through you, that you truly believe that multifamily is this vehicle that will change not only your life, but their family's life and their family's life. And if you can start identifying as that, you will become a successful person raising capital. Let's take a quick time out to hear from our sponsor. This episode of the Jake and Gino podcast is brought to you by Wheelbarrow Profits, the premier multifamily education community. Wheelbarrow Profits proof is in their results. Their members have closed over 86,600 units. That's over $5 billion in student deal volume. Are you serious about taking your real estate game to the next level? Do you have the confidence to take action? Schedule a call with your Wheelbarrow Profits team today and supercharge your real estate knowledge. Build lasting relationships through unparalleled networking opportunities. Obtain lasting knowledge on how to buy multifamily real estate with intensive training. Gain hands-on experience through their live events with like-minded individuals and industry professionals, all while experiencing the personal touch and family atmosphere that set them apart. Go visit wheelbarrowprofits.com for more information. And we're back. Let's talk about one of your favorite deals.
My last deal was my favorite deal.
Yeah, but that was a really nice deal. That was like a $20-something million deal. Let's talk about maybe one of the Virginia deals. And as you may be listening to this, I have implicit knowledge on a lot of Vince's deals. Mm-hmm. I've coached him through a lot of the deals. And I don't want to take the success for it because it's a lot of hard work, but a conversation can save you $100,000. Let's talk about the Chris Voss deal and the El Paso, Texas deal. I mean, being in the community, paid the investment tenfold just from 1 hour of a conversation that we had on a mastermind call with Chris Voss the week before you're closing on a deal.
That's a great story. I bring that one up often. This was our first syndication. 2018, we did the 52 unit joint venture. We didn't do anything for the next year. We were just, trying to figure out our systems, our processes, who Tri-City is, what's our strategy. That was pretty much all 2018 or 2019. Getting into 2020, that's when we're like, all right, we're going to try this syndication thing. We feel like we have confidence enough. We're going to try a small one. It was only like a $2 or so million deal in El Paso, Texas.
Only, but like, once again, only. That's the limiting
Yeah.
belief. I can only, $2 million is a really big deal for a lot of us out there.
It was for us at the time. And it also was the first syndication. So we're actually first time raising capital that's not coming from our own family. So, and right at the time you're doing due diligence and we're about to close, COVID hit. It was like March 2020, COVID hit and the world's like melting down. Everything's locked down. This is the first time we have like hard money in the deal. Like our earnest money is non-refundable and all this stuff. And it's like, all right, what are we going to do? So lean on the community. I was like, this is our first indication. We have, our first deal. What are we going to do about this? The world's melting down. So lean on Gino, lean on the community. And then
secretly, Vince is saying, I'm going to kill Gino. What the hell did he make me do? Why did he push me to do a syndication?
No, not at all. Not at all. There's absolutely no pushing to do it. It was just, one of those things happened. But again, the confidence in the group, I was like, we'll figure it out. But at the time, March 2020, the world was ending. Nobody knew what was happening. At the same time, the Chris Voss, the mastermind call with him came on, and he was going to the round table, kind of giving his tips on negotiation. And then, Gino gave me a shout out. He's like, hey, Vince has a problem right now. You're supposed to close the deal. The money's about to go hard. We got all this COVID lockdowns. You're talking about eviction moratoriums. Nobody has to pay rent. Like, every landlord in the country was freaking out during this time. And Chris gave me a couple tips on how to negotiate, how to go back to the table, even after, negotiations were supposedly settled. And he's, here's how you open that conversation. Here's some tips on how to go back to that table, lay the circumstances and go in for an ask of another concession. So I wrote that down, went prepared, and it was like 7 pages of his tactics from the Never Split the Difference, of every possible thing that they could say I thought about and already had a rebuttal for, and continuing to drive that conversation toward the outcome I wanted, which was about $100,000. It was $80,000 of a concession in cash in order to weather the storm of eviction moratoriums. And they didn't have any counters. It was immediate. Like, the first couple minutes of the call, of course, they were a little frustrated. But every time they brought up something, I had a counter for it. Every way they tried to move on that chessboard, I had a counter of why we needed this credit in order to continue to stay in this deal. And they ended up conceding. It was a $80,000 credit or a little bit over that, and a full month of rent credit. They didn't prorate the rents, which is another 10 or 15 grand. And we ended up closing that deal, and that gave us the cushion to weather that storm. And then the eviction moratoriums in Texas weren't as bad as other places, so we actually had a surplus of cash because of that. And we ended up closing that deal and selling it, and we had like a 43% IRR on that deal, internal rate of return. So we absolutely crushed it, and largely because of that buy right, up front, and going back and having that mastermind and having access to people like Chris Voss to help me through that negotiation or in that crazy time.
If you'd like to learn more about Chris Voss, we've done a couple podcasts with him. Just go to the Jake and Gino podcast, type in Chris Voss. We've done 2 shows with him. We've done 1 show with his son, Brandon. We've done another show with one of his executives, Derek Vaughan. He's also a master negotiator. I've also got book notes. If you want to hit me up for my book notes, I'll give them to you for free. Gino at jakeandgino.com. I'll send you a free copy of them. I've done copious amounts. Just always start out, and Vince probably started out with the conversation, how can we do this? The world's like, how can we make this happen? I want to close the deal, but how can we? And there's some certain things that Chris Voss discusses, and it's just business wide. He's got the accusation audit. He's got mirroring. He's got so many different ways to become a much better negotiator. And really, you're ultimately trying to create value. And what Vince was trying to do is he was trying to take away some of his downside risks and the unknown. But what Vince also knew was he had his buy right criteria, but he also knew that he wasn't going to overpay, which is really, really important. He would walk away from the deal, but he understood that he has to limit his risk. And how do I do that? Get those concessions. I mean, that deal was awesome. Give me the most recent deal that you've done. Let's talk about that one.
Yeah, the most recent deal was our largest deal. It was $28 million. And it's another thing, when you sit back and reflect talk about that, it's like, in in 2018, our first deal was like $1.52 million. And that wasn't that long ago. And now 2024, we closed our largest deal at $28 million.
$28 million.
Yes, in just a couple of years, and it feels like it was a long time ago. But then, like, then when you step back, it's like, wow, that was just a couple of years ago. We thought $2 million deals were huge, and at the time they were. At the time of where we were at, they were large deals. So yeah, $28 million. This came off market to us, and it came off market through a broker because they knew we were in the market. We had credibility. We're known. We're starting to build a reputation here as closers. We say what or we do what we're going to say. We don't just go in, start firing off LOIs on everything that hits the market. That usually sends a little bit of a red flag up with brokers. If you just want to write LOIs on everything, we don't. We have our buy right criteria. This is exactly the type of asset that we are looking for. And if you present us with this and underwrites well, a good cost basis, we're going to go after it pretty heavily. So we already had a track record with a broker of closing 4 or 5 deals and closing smooth, no issues. Like I said, and that's what brokers like. They like make their life easy. Don't overpay. Stick to your criteria, but don't waste people's time. So having that credibility, having that reputation, they brought us this deal off market, and it was a HUD loan assumption. So HUD is the government agency, fantastic debt, 4% fixed rate, long term, 40-year amortization debt, phenomenal debt on this asset, and we assumed that loan. So the buyer, us as the buyer, the seller, and the lender kind of all get together, and we just kind of sign the loan over to us. And we pay the equity difference to the seller. And we took over the loan. It's a 2021 construction that was purchased at about 25% or so under replacement value. Like if you were to build that 21 building today in 2025, you're probably 20 to 30% higher than what it would cost to build the exact same building next door. Mm-hmm. So we got a great cost basis on this thing. We have great debt on this thing. Virtually no CapEx needs to get planned during our hold period. And we're just going to ride up the next part of the market cycle and probably exit, maybe around 2028, 9, something like that.
Well, listen, before we close out the show, if I'm listening to this, and whether I'm in the military, whether I'm working in a job, whether I have a small business, whether I have a couple of small multifamily units, what would you say are top 2-3 things that I need to do today to start my multifamily journey or to continue it along?
If you're looking at today, I think we already kind of touched on it, is find your why. That is getting clarity on the why, I think, is more important than anything else, because anybody can jump in a boat, but if you don't know where you're rowing, you can waste a lot of time, a lot of energy, a lot of money. I see people that bounce around through different educational programs, or they're gonna do crypto, and then they're gonna do multifamily, and they're gonna do stock options or trade whatever bonds or something. So it's start, and I think a lot of it is because they didn't have the clarity. So start with your clarity, get with your spouse, you can bring your kids kids in and be like, what is the lifestyle that we want to live? What's that dream life that we want to live? And then really map that out. What does that mean in cash flow a month? What does that leave in time freedom? So figure that out first, and then you can start getting into multifamily. And you don't need to jump directly into a mastermind program and spend the money for it. Like, go get a couple books. We have a whole bunch of books on, you go to Amazon, get the Wheelbarrow Profits books or Creative Cash or any of those, Real Estate Raw, and just kind of get into the mindset of what it takes to be a multifamily entrepreneur. Start with a couple books, watch podcasts are free. There's so much value in podcasts like this. Get in some podcasts and then get a little bit deeper. And then maybe even buy a small multifamily on your own. Just go buy a duplex or fourplex. And I call that like a sandbox type property. Because if you don't want to go out and just put everything you got into a thing and then realize you don't got the stomach or the time to be an entrepreneur, and that's fine. It's perfectly fine. A lot of people don't. But if you go buy maybe a duplex or a fourplex or something like that, dip your toe into it, you can mess up on a property like that. But most people aren't going to go bankrupt and lose their entire life savings on a duplex. So maybe dip your toe into something as a small property, like a duplex or fourplexes, in your town, if they're affordable. And then see if that's something you like. See if that you get the spark of, like, I love the real estate. I love the managing of it. I love watching that debt, the residents pay the debt down. I love watching the market and the inflation appreciate the property, and then get into the larger multifamily. And I think that is a good route, because I see a lot of people jump right into something really big. then they can probably take smaller steps into it first. So that's what I would do, is get clarity on your goals, vision, your timeline that you're trying to achieve it, and then dip into maybe some small multifamily, or you can always jump in and join a community like ours.
Vince, how can the listeners get a hold of you? Where can they find out more about the Wheelbarrow Profits community and Tri-City?
Yeah, absolutely. So for me, I'm on all the social medias: Facebook, LinkedIn, Instagram. For Tri-City, tricityequity.com. If you want to learn more about like what I'm doing in my own personal companies here in Dallas, Fort Worth, and if you want to learn about the community, wheelbarrowprofits.com to learn about how to get into a community like this and see if it's the right fit for you.
In 2013, Vince Gethings, Master Sergeant, is in California. He uses his VA loan, buys a deal. A little while later, sells it, goes to Hickam Air Force Base in Hawaii, makes 130 grand. He's like, dude, this is the deal. I can't believe this just happened. This is completely life-changing for me. I got this real estate bug. What am I going to do with this money now? He decides he's in Hawaii, where most people would say, well, I can't afford real estate there. I'm not going to invest in real estate. He decides to start looking in Michigan. The word competitive advantage. If you're out there and you're listening to this, what is your competitive advantage? Vince's competitive advantage was really going out, finding a market where he knew he had people, he had boots on the ground. But the competitive advantage also was he could build systems and processes and build a team. So you couple those two, he starts buying deals in Michigan, but then he hits up against the wall like every single investor I've known, including myself. I ran out of money. How do I continue to scale? I see all these jabronis out there like Jake and Gino with thousands of units. How the heck did they do it? Well, let me go check out their event. So in 2018, he packs his bags. He goes to Nashville, Tennessee. He's sitting in the crowd. He's like, wow, buy right, manage right, finance right, syndication, community. This has got so much energy. This is where I want to be. I want to be a part of this. I want to learn how to scale up and do my next deal. Vince does his next deal, 50 units. And then Vince goes into El Paso, Texas, does his very first syndication, $2 million in 19, continues to do deals, continues to scale up his portfolio, buying assets, turning over assets, selling assets, refinancing assets, becomes a coach in the Wheelbarrow Profits community, is helping dozens of other students, as we said, helping to close over 86,000 units within the community, putting people together because he understands the accountability is so important. He understands that networking is important. He understands being around the right peer group is important. That's what he's embodied through the academy. And you take it to today, going from a $130,000 profit back in 2013 to closing a deal that's worth over $28 million with a replacement cost probably in the mid $35 million range. If you want to know how to do that, just go to wheelbarrowprofits.com. Sign up, register to see how you can work with the team because you need to create a multifamily team. This is a team sport. It is a business. It is becoming a multifamily entrepreneur. And if you can surround yourself with the right people and you can learn how to buy right, manage right, finance right, I will guarantee you'll be on your way to becoming the next multifamily entrepreneur. Vince, I want to thank you for being part of the show today, and we will see you all on next week's Jake and Gino. Take care, everyone.